All right, guys, Stocks by the Numbers. Welcome back. It's Wednesday again. I wanted to do a video, a little overall analysis here on Philip Morris Incorporated, ticker symbol PM, listed here on the New York Stock Exchange, this tobacco company. And again, I mentioned that this falls into the sector of a defensive stock. Defensive stocks, not to be confused with defense stocks like Raytheon Technologies or Lockheed Martin, right? We're talking about defensive stocks, meaning that the company overall basically maintains its business and could actually continue to grow still while the economy is, in a rough situation or times are tight, inflation is up. All of that really doesn't matter when it comes to defensive stocks. Good examples, again, tobacco companies, food companies, gambling stocks like DraftKings, and alcohol companies. My apologies, just drew a blank right there. But yeah, overall, those are the couple of types of companies that are defensive. Meaning, again, whether the market or the economy is up, down, or sideways, those companies are going to consistently do their business and generate their revenue. And Philip Morris has actually been doing very well. And if we go back just the last couple of quarters, we can see that with estimates down here at like $7.5 billion, the company was coming in above 8. And then here they jumped estimates up to above 8, and the company just slightly missed by about 1%. So obviously they began to bring the stock down. I think this was when I first maybe brought it to your guys' attention, or I know I mentioned it in the Discord because I know a couple of people took a trade and we had this descending wedge and we were in this long-term symmetrical triangle. So we wrote it back up to the top of the range. Then you can see we broke down out of the triangle, regained, rejected, and now we're climbing back up out of it. But I wanted to show you that. Hold on. Yeah, so see, estimates were down here at 7.3 billion, and they came in above 8. And then estimates still down here at only 7.5. They also came in above 8 again. And then you can see that once they bumped estimates up to above 8, around that 8.1 level, that's where the company came in a little bit light. And that's what I'm noticing here with a lot of stocks. And again, it could be brand name companies. Big tech stocks as well. That's what I notice. It's, they're doing a couple of $100 million or a couple of billion in revenue. And then most of the time, it seems like when Wall Street adjusts its estimates and pumps them up to try to meet what the company was previously doing and kind of get them to that next level, that's when the company will, usually it seems, actually report a little bit light. And then the stock will bounce around and kind of be volatile for a couple of months. And then, the next 1-2 quarters, as it's maintaining those high estimates, now, the revenue adjusts itself and all of a sudden they're able to beat earnings. Because, again, that's kind of what you saw here. Once estimates broke above that 8 billion mark, all of a sudden the company missed. And then the next quarter, estimates up to about 8.75 billion and the company posts almost 9 billion. Right? And now we fast forward, look, and you can see again. So now they brought estimates up to the next leg higher. Okay, now you're at the 9 billion mark. Okay, no problem. For this quarter, you should do 9.21 billion, and the company posts 9.14 billion. Now, technically on paper, was it a miss by over 70 million? Yes. However, if you look, last time they missed by about 1%, this time they missed by about 0.8%. So overall, with the company trading here at about 93.70, down 80 cents, about 0.8% here on the day. In my opinion, I actually think the stock is undervalued because, again, we're dealing with a defensive company, but also, more importantly, we're dealing with a consistent company, right? Where we see a phenomenal dividend here with this stock. Right now, the market cap's about 145.5 billion. The company's paying a dividend that's yielding out 5.5% right now, and we have a PE of only 18.33, right? So technically, on average, we can say between 20 and 22 could be a decent PE. So just looking at that number, we can say the company's due for potentially about a 10% rally here, which obviously would bring us to about 102, 103 a share. And the beta as well. Again, the beta is the volatility of the stock in relation to the overall volatility of the market. And you can see that this stock is 0.68 times as volatile as the market. So you have a stable defensive stock. You have a company that is consistently growing revenues. You have a company that pays out a healthy dividend and keeps it. You have a company that, in my opinion, is undervalued in the PE. And you have a company that is less volatile than the overall market. So when people always ask me, yeah, why do you like PM so much? This is why. This is why right here. And if we come down here, we can see, we can look at the EPS. We can see we've come in above analyst expectations for the last 4 quarters in a row, expecting a little bit of a dip here in Q4 of 23, but in my opinion, really nothing to be worried about, because again, the main lifeline of the business is the revenue, and you can see that revenue was 796 billion, up above 8, stayed above 8, jumped up to almost 9, and now broke up above 9 at 907. Now yes, the profit margin did slip down here, going from almost 30% all the way down to 17.5%, but then you see the immediate rebound there, 22.5% on the profitability. So that's why overall in the numbers, in my opinion, I like Philip Morris and always did. And that's why anytime there would be a dip down, I would always try to alert anyone I could, really, that, you know, in my opinion, PM was a buy, and you give it some time and you'll be fine. But as you see here, going from the last earnings report where they had that slight miss, we can see that the stock was in the low 90s and got up to about 93.30, and then they kind of chunked it down and brought it down here to these new 52-week lows, 87.23. But then from that point, it began raging, right? Now, obviously, this happened at the end of October, so, you know, it kind of worked out well with the timing, because if you remember, we had the random pump throughout November and December, and then, of course, now we're running into some volatility and some sell-offs in January, as I predicted in previous videos, because we can't just keep going up and up. But the stock has chunked down and come down a little bit here. Now, also, I want to talk about the dividends as well, right? Because usually, even if a company is doing well and looking stable and strong fundamentally, when they pay out a dividend, technically Wall Street usually starts to sell off the stock, right? Because the company had X amount of cash on hand, and now they're paying out X amount of dollars to shareholders, right? So technically, on paper, the company is worth less than they were before the dividend payment. And this is why sometimes you'll see a potential dip on the X date, and then you'll also see a dip on the payment date as well, right? So X date was the 20th, and as you see, the company was sitting here at about 95 and change. Boom, we hit the X date, and we dropped down to sub 92. Then the stock actually began to rally, but look at the actual payment date was January 10th. And then if we come over here, look, January 10th, we were up here, and boom, we dropped down. We tried to retest and regain that fib, and then rejected and dropped back down again, right? So that's why sometimes you do see some weakness when it comes to dividend payouts. But again, just a quick differentiator here, in case, you know, you never looked it up, or if someone for some reason doesn't mention these very important terminologies to you, the X date is obviously different than the payment date. So the X date, the reason why the X date is ahead of the payment date is because the X dividend date is the last date that you can be a shareholder to receive that specific dividend payment. Right? So the X date, December 20th, that's the date you had to be a holder of shares. So if you bought this the day before, December 19th, you're going to get this payout of $1.30 a share on Wednesday, January 10th. Right? So that's the X dividend date. The dividend payment date is actually when the payment is made out, obviously, right? Kind of self-explanatory, but I know there's a difference between those dates, and some people, you know, they just don't understand it. So I figured I'd go over that real quick. But again, as you see, the payment came out a couple of weeks later, and that's when the payment is actually made. So you have your X dividend date is your deadline that you have to be a shareholder, and then you have your payment date when you receive the dividends. But overall, looking at the technicals as well, just for point of reference, this is the bottom there of this candle on October 27th, on that Friday, and then I just kind of connected up and went up here. This is the 1-year chart, so it looks a little off, but if I switch to like the 3-month chart, you can see that I went from the bottom of that candle on October 27th, connecting to the bottom of that candle on December 6th, connecting to the bottom of these candles today. So now, in my opinion, this is the point right here, this trend line. We have to see where the stock closes, because in my opinion, we could have a potential flash crash down, maybe about a point and change, down to like the low to mid 92s. We'll look at stock charts in a second. But in my opinion, it technically really should bounce off of this trend line and continue back higher. As you see, we've kind of been in this upward bouncing channel here really since the end of October. Even though, again, the numbers came in a little light, it's still showing that they were close and the revenue is growing and heading in the right direction. That's why sometimes even when you see a miss or you see some red numbers, you would assume that it would go down. However, again, remember, stocks technically trade based on future value. So that's why if there is future potential and growth seen, even off of a miss and some red numbers, you may actually potentially get a little bit of a rally and a pump and a reward, as opposed to the stock getting beaten up and crashing down. But in my opinion, that is the trend line that I personally am currently watching anyway. And we'll switch over here to stock charts quickly before I let you go. And you can see, this is what I was worried about, because again, it has been in this upward channel. However, it could potentially come down and meet these moving averages here, which of course, incidentally, are basically meeting and intersecting with each other at this same level. You can see the 50-day on the daily, 92.39, 200-day, 92.36. So that's why we could potentially crash down there about what is that, like a point, like 1.25, and we could drop down and just retest those moving averages and then have an immediate pop back up into the 93s and 94 and just continue upward in that channel, right? You know, these things do happen. We saw it similar with Coca-Cola that we looked at in the past. I looked at the all-time long-term support lines, right? And what did I say? I said we could flash crash down to like 50, 51, or whatever the level was. Honestly, I can't remember at this moment. But I said if we flash crash through the support level, it's going to be a fundamentally sound, stable company with a proven track record like a Coca-Cola that would see an immediate bounce and rebound back up above that long-term support trend line. If this sounds familiar, we spoke about it in the Hershey video. And that's exactly what Hershey did. Hershey flash crashed through that long-term support trend line down into like the 178s. And I'm sure a lot of people were like, holy crap, it's below the trend line. And then what happened? It immediately popped back up. And now even today, in a red volatile market, the stock was holding like 192, 193 for most of the day or something like that, right? So that's why, again, it depends on the stock and how fundamentally sound it is. And again, I understand that, you know, it may be a lot to keep in your mind, a lot to keep an eye on, but you know, again, the more you put into it, the more you get out, right? And that's how the saying goes. You know, you get out what you put in. So, you know, if you're just like out there throwing darts at a board, like, oh yeah, this looks undervalued, I'm buying this, and then all of a sudden it starts tanking, you know, obviously you didn't put in enough time. And granted, sometimes these things are out of our control, right? A random downgrade comes in, or some negative article gets posted about the company or about their product or something. So I can understand, you know, we can only control our controllables. And that's why I say, in my opinion, I'd rather risk, you know, 1 to 2 points on a flash crash on a stock like PM, because looking at the numbers and looking at the growth over the last several quarters, especially with a rough economy and the company in a defensive market, that's why I say, in my opinion, you know, even if we drop down, chances are we have a very, very high probability to rebound and bounce right back up. But we can see the MACD on the daily cross recently a couple of days ago. That's why I'm saying if we're still kind of in this downward momentum, we could potentially drop down to those moving averages. But overall, I think it's going to be good. The RSI here sitting at about 48 3/4, we'll call it. And you can see that over time, it has kind of stayed in between those benchmarks of 30 and 70. So, you know, no guarantee that it'll drop down and get to that 30 mark. But if it does drop, you know, a point and a quarter in the next day or two, that'll probably bring the RSI into the 30s, which, again, in my opinion, would be a buying signal. Switching over here to the weekly quickly, and I'll let you go. Yeah, and you can see this one really like pops and drops, and all you have to do, I mean, I know it's easier said than done, but if you are able to determine the channel and the range that it's staying in, and obviously we buy at the bottom and we sell at the top and grab puts, and then we sell and buy at the bottom, and, you know, and rinse and repeat. But you can see even the way it'll crash down below the 50-day moving average, it immediately regains it, and it comes down with a huge red candle and then immediately regains. And you can see big red candles and regains. This was the biggest test for the stock. As you see here, this took the longest for the company to come back up and reclaim that 50-day moving average. But again, even here, big red candles, immediate regain. Big red candles, immediate regain. And here, as of late, actually, well, again, this was during the market sell-off as well, right? We had August, September, October, the markets were selling off. And technically, the stock is not trading at book value or below book value, so it could go lower, right? That's what I always say. If something could go lower, Wall Street will more than likely take it lower. And again, even brand name companies like this do succumb to this sometimes. But again, you can see right as markets reversed, and even though the company, we looked at the numbers, even though the company came in slightly light, the revenue popped up and grew and now hit that $9 billion benchmark for the quarter. And that's why I think the stock got rewarded and got brought back up to the top of the range. So again, even here on the weekly, you can see the 50-day moving average is only about 92.5. So that's why I'm saying, in my opinion, we could drop down to this 92.52 level. We could drop down to like 92.36. But then technically, in my opinion, looking at the technicals, technically it should bounce from there. And even the RSI here on the weekly as well, you can see we had that slight breakup above 70, but overall the RSI does stay between that 30 and 70 benchmark here. And this is again going going back 2 years and change. So pretty decent historical record to look at here. So of course nothing is guaranteed. But again, that's why I think on the weekly, the RSI, may dip down into the 40s, which would bring the daily RSI down into the 30s, which would then signal a potential buying opportunity, and that would reverse and climb back up on the weekly, right? Probably bring it up back into the 60s above that line. But yeah, overall, that's pretty much it. You can see the weekly MACD potentially curling to the downside. But again, they could bring it down maybe for a couple of days and bring it down to 92 and change, potentially even flash crash at sub 92. But in my opinion, it should actually bounce off of that meet with the red, not necessarily cross to the downside. But of course, only time will tell. Again, in my opinion, this trend line right here that we're watching is the key level, in my opinion. So only time will tell. But overall, I like PM. Philip Morris. And again, if you really think about it, yeah, times are rough. Inflation is going up. Mortgage rates shot up. Everything sucks everywhere you look. But I will say this: if I'm stressing out right now and I'm just grinding along, doing what I have to do, if I'm a smoker, it really doesn't matter what the hell's going on, because when I run out of cigarettes, I'm gonna go buy another pack. That's why a company like Philip Morris is known as a defensive stock. Again, not a defense stock, a defensive stock, meaning that the business will be maintained and even potentially grow during good times or bad times. And I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky and volatile and very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for stopping by. Have a good day.